To be an effective trader, you need to look at edges that other traders are missing or not looking at. And most technical indicators usually are based on price. So when you get an indicator that uses price and volume, usually it produces unique perspective. Hello everyone, my name is Ali Casey from Stat Oasis channel. Money flow index is a unique indicator because it combines price and volume to construct an oscillator. And oscillators are really good for mean reversion strategies because they tell you when the price is overbought and oversold. And although most oscillators fail to generate short trades on the indexes, this one does really a good job. Like I mentioned, money flow index is an oscillator that uses price and volume. And that's the main difference between it and the other oscillator. But the way we will use it is just like other oscillators, which is to find the overbought and oversold levels. Another difference in money flow index is it doesn't use the close in the calculations. Instead, it uses the typical price. And typical price is the high plus the low plus the close divided by 3. So these factors, the typical price and the volume, make this indicator unique. And here is the money flow index on the chart. I have here the Russell 2000 futures, and at the bottom here we can see the money flow index indicator and the two levels of overbought and oversold. So default is 14, which of course meaningless as usual. But if you open it up, you can of course change this, and if you switch it to 2, which is we compare it with RSI 2, you can see now we get many more signals. And of course, anything between, I think, 2 and 10 is good. But 14 is definitely, I find it too slow. Now, it doesn't matter because we are going to test the whole range and find a stable area to see what we can trade. So here we are in MultiCharts, and I have the same futures market, which is the Russell 2000. This is the daily bars. And we will introduce the strategy to this market. So this is the strategy using a 2-bar look back. So just like I showed you on the chart, with 2, you get many signals. And then we're using 25, the level 25 to go long, but we're also using 75 to go short. So this is a long short strategy. So here is the strategy parameters. Our look back is 2, and that's why we have so many signals. And the oversold area to go long is 25, and the overbought level to go short is 75. So the strategy is long and short. Just remember that short is really difficult on the indexes, but we are going to try to make it here. There are no filters currently because 0 denotes no filter, and the exit type is 0, meaning we're exiting on the same bar. So once we enter, we exit on the same bar. This is just to see if there is an edge or not. So it's a huge number of trades. And the strategy, there is nothing actually. So this is 3 and 2, that's scratch. Remember, there is no slippage and commission in this strategy. So I will develop the short side separately from the long side to see how this indicator can help us in creating a short strategy. So we will optimize the strategy from 2 to 10 in step of 1. And our entry level to go long, so it's below 5 all the way to 45, step 5. And our short level, which is to go short, above 55 all the way to 95 in step of 5. So all in all, we have 729 combinations. Remember, we are still exiting at the same bar, again, just to find an edge, but this time it's only for the short side and no filters. So sorting by custom fitness, which is the return to drawdown, and we can scroll down, we can see we have 27 strategies that are doing same amount of profit compared to the drawdown. Okay, so I guess that's an acceptable edge. Remember, we're exiting on the same bar, so that's definitely going to be enhanced once we introduce an exit strategy. And it looks like 6, 7, and 10. That's the look back. And after 10, we have 5. So then I think 6 would be a good choice. Now, between 6, all these are 85 and 75. So maybe we pick something in the middle. So 85, 25. Let's do that. Okay, so now we have a short strategy with the money flow index using 6 look back, 25 to go long, and 85 to go short, exiting the same day. So now we will introduce the exit strategy. So 0 is the same day, 1 is the next day, and 2 using the opposite signal. So let's test these and see. And so 0 is the original. And now we find that 2 is the best, which is the opposite signal. Because you see here, the average trade is 43, and we almost triple our average trade. And we reduce our total trades from 337 to 107. So definitely, this is much better. Okay, so now that I'm satisfied with this, let's pick it. And let's see. So our strategy now, short strategy, we're making 107 trades. On average, we're making $116. This is on the Russell, so that's definitely a good strategy. Now I can further go and enhance this strategy by adding a filter. And here I have 66 filters. Half of them are my market regime filters. This is version 2 of market regime. And the other half are just regular filters. And let's sort by custom fitness again. And let's look for the number 0 to see. So here is 0. Okay, great. So 21 filters produce better results than the original strategy. And if we look at the top, remember, this one is making $12,000. And here we have 18, we have 23, 21, 29, also good. Now, filter 1 to 40 are my market regime filters. So this is my market regime. So let's look at the next best one out of my market regime. And this would be 56. And let me look at 56. And believe it or not, filter 56 is if the close lower than the previous close happened twice in the past week. And this filter is amazing because compared to the original, first of all, we reduce the trades in half, we reduce the drawdown in half, and we double the profits. And it's only the close lower than the previous close twice in last week. So this is an amazing filter. So let's pick that out. And this is now our strategy. Yes, lower number of trades, 51. And we're making 465 on the Russell. That is just amazing. And this is how the curves look like. Of course, this is one side. We know that the long side, it will be very easy to generate a profitable strategy. So now I'm going to test the strategy on the S&P 500. Again, this is just the short side. We're exiting on the opposite signal and we're optimizing the look back and the levels. And as you see, again, it's difficult to generate really good strategies. So we're making profits, but the same drawdown. But of course, we can enhance this with a filter. So 3 shows up in the top. So I'm assuming 3 is good. And then these are the overbought and oversold level. Let's pick something in the middle. So maybe 85 and 35. That looks nice. Now, obviously, this is worse in drawdown, but again, the filter will enhance it. I'm just trying to pick a stable area. So let me go with 5. And now we will test all our filters. And if we sort by return to drawdown, again, about 20 filters perform better than the original strategy without a filter. And again, up to 40, those are all market regime version 2. So 24, 11. So the next one we have is 49. So 49 also producing better profit, but higher drawdown. But still, let's see what 49 is. And the filter is if the close higher than the previous close, either today or yesterday. So again, it's an extremely simple filter, but see the result. So we have 264 trades, goes to almost half. And then our average trade goes from 99 to 436. And if we choose this filter, and we have 138 trades making plus $400 on the short side. So again, this is really, really good. And this is how the equity curve looks like. So in my view, this is one of the best indicators that you can use to generate short strategies on the indexes. Because I think the combination of the volume and the typical price. Because all other indicators, usually they are using price only, and that's why they have many false signals. This one is like using a filter, which is volume, built in the indicator. Now, of course, you can still optimize long and short together, but I don't do that. But let me show you what will that look like. So same thing here, we are optimizing the look back and the oversold overbought level, but now we are long and short together. So we're almost going to be always in the market unless we have a filter, because the exit will be the entry for the other side. Sorting by return to drawdown, you can see we have many strategies that are doing really well. So definitely more than half the strategies are really good strategies, long and short. And you can see this is the look back 3, overbought 65, oversold 35. Remember, long and short together. So if I choose it, you can see how the strategy in and out, switching in and out. Now, if we introduce a filter, again, we will test all filters. And if we sort, return to drawdown, and let's look at 0. So this is our original strategy. And we can see we have 9 filters doing much better than the original strategy. Again, 0 to 40 are my market regime version 2. And we can see a theme here that market regime usually produce the best results because it's built on direction and volatility. So the best one we have after market regime is 55. And if I look at 55, and filter 55 is if the close below the previous close, either today or yesterday. So again, extremely simple filter, but the results are amazing because the difference is huge. This one is 758 trades, and this one is 661. So that's almost 100 trades off. But then the average trade goes from 300 to 400, and drawdown goes from 46 to 36, and profits goes from 218 to 276. So if we pick that, so this is how the strategy looks like. And we see now we have almost in the middle, so 319 trades in the short side and 342 trades on the long side. Both of them in the 60s profit rate, and both of them making above $300 for the ES, which is really good. And looking at all years, we can see 2020, which is the COVID year. And that's why you see this huge number, because the short crash in the COVID, this strategy made a lot of money in it because it has really a good short side. Now, the advantage of using the entry signal as an exit signal is you can use this strategy in the same account, because usually brokers will not allow you to go long and short in the same account. But when doing this strategy, you're always exiting one side to enter into the other side. So this strategy can be applied long and short on the same market in the same account. To learn more about indicator strategies, watch this video and I will see you there.